Hey, this is Awais with OpenTrader. Now, in my last video, we talked about Wednesday, January 16th, which is this day over here, and we talked about the concept of unsustainable highs and a failed breakout based on a lack of momentum via the NYC tick, via lack of positive internals, and a lack of volume. So we combined all those ideas and we took shorts up here at resistance, thinking that these were unsustainable highs. Now, I want to contrast that with the following day, Thursday, January 17th, where we actually got the breakout, and that was the one that actually stuck. So, our trade plan heading into Thursday morning, January 17th, said that ES broke out to new highs on better than expected economic data. In the morning, we consistently saw above average volume in the overnight session, and this breakout had a chance to stick at this point. So our bias was really to the long side, and really the only trades we were considering Thursday morning were on the long side. So we were not looking for shorts at all. And as part of the trade plan, it also mentioned that we have some recent swing highs from the Globex session in the 1470 quarter to 71 half range. And in the event that Thursday becomes a trend up day, we could see aggressive buyers active at 70 quarter to 71 half. But we also said that that's an aggressive area to go long. Then our directional bias was bullish above 1465 to 1467 ES, with the primary upside objective at the 1480 to 1482 initial resistance zone. So let's go ahead and scroll over to the following day, Thursday, the 17th. And right away we can see that this is a big contrast to the prior day, right? Where we had that failed breakout and we had the unsustainable highs. On this day, the context was very different heading into the day. We had a strong breakout in the overnight session and we had it on above average volume, right? So it wasn't a low volume breakout. We were seeing some conviction in this directional move. So really we wanted to lean more on the long side and try to get to that 1480 to 82 area. But when you're trading on the day time frame, it's not as simple as identifying a profit objective on the upside or a target and then just getting in on the trade, right? You have to get the direction right, you have to be in at the right trade location, and then you also have to time it right so that price doesn't go against you by so much that it stops you out and then runs in your direction, right? So you have to get all those components have to be in order for the trade to really work out, right? I mean, we use between 1.5 to 2 point stop losses on our trades, so we don't really have a big margin of error on our entries. We have to get in at the right price. We have to time the trade properly so it doesn't go too far against us, and we of course have to get the direction right. Since we are trading directionally in the ES and we're looking for price to make a directional move, and all those three components have to line up, and then it turns into a profitable trade. So looking at Thursday's chart, we had the Philadelphia Fed survey at 9 a.m. Central, and we were expecting some consolidation balancing in the first 30 minutes, and then another directional move after the econ data was out of the way. So the first 30 minutes, we really didn't see any point in being active in the market. Even though the trade plan talked about 70 quarter to 71 half, which is this price area right here, and we can see that buyers are active here. If you look at these bars right here, 70 half was the low, then the econ report comes out, we put a one tick low, and then we reverse to the upside. So this tells us that pretty aggressive buying is happening in this area. And if we look at the NYC tick, we can see that there's really no momentum to the downside. The S&P Advanced Decline is holding decent levels, is holding above positive 200 and not really pushing much lower. So, those are all things we like to see in order for that breakout to stick. Now, if you weren't able to get in over here, because this was right after the news came out, so it was a bit of a quick entry if you had to get in. But let's suppose you weren't able to get this price, right? Let's suppose you weren't able to get in on the news event, right after the econ data came out. What was your second entry? Well, right after this, S&P makes a new high and also sets a new tick high over here, right? So this confirms that momentum is certainly to the upside. So at this point, what we're going to do is we know that directionally buyers are in control. We're targeting 80.82. So we're going to look for a good risk reward spot, good trade location to get long. And in this case, this pullback to the opening range low, to the day session midpoint, VWAP on a positive tick divergence gives us that long setup anywhere around this area. It gives us that long setup targeting 80.82, and even in the event that this setup doesn't work, the risk reward is very good, right? You're risking 1.5 to 2 points, and on the upside, you're looking to make anywhere between 7 to 9 points, right? You're targeting 80 to 82. But even in the event that this trade didn't work out, we would still look for long setups at the support zones below because the context was supporting the upside. And given the market internals, which were holding up pretty well, given momentum, right, you can see over here that once we reject this area and start holding above the midpoint in VWAP, you can see the NYC tick starts holding above zero. This shows us that there's really no momentum on the sell side. There aren't really any aggressive sellers over here, and this is really just building up steam to go much higher. And this setup, like most of the setups that work, doesn't really give us a lot of heat. At most this might have gone maybe, even if you got a entry somewhere in this area, it might have gone 2 or 3 ticks against you, 4 ticks max, and you didn't really have to sit through a lot of heat. And then on the upside, we got a little bit of rotation around here, around the overnight high, and then it hits our target in the afternoon at the 80 to 82 zone. And that was really our primary upside objective, and you can see that we didn't really have any resistance between this support zone down here and up to 80.82. There really wasn't anything in the way, right? Besides the overnight high where we got a little bit of rotation, but aside from that, we weren't looking to take any shorts anywhere here. It was really just directionally to the upside, and then this was the target. So just be patient, let the target hit. Now, once it gets to 80.82, it's also important to see that we are getting a negative tick divergence up here. So at the very minimum, it's a very good idea to take profit at 80.82. That's really our, that's our main upside objective. It gets hit, you take profit, the trade's over, right? Now, at this point, it's really a matter of how aggressive you want to be. Now, since we're directionally moving up and we're in the context of an upside breakout, you really don't have to short 80.82. But at the same time, it is a resistance zone, so at least you're getting good trade location if you're shorting it. And we can see that on the downside, this zone does hold up, and we get a pullback to the midpoint in VWAP again. So in the event that you did take this short at the 80 to 82 zone, even that really worked out, even though we were looking pretty strong heading into it, right? The S&P internals hitting close to positive 400, NYC tick really showing more upside momentum until about over here, right, where it starts making new lows. But at this point, when it was testing this resistance zone, it really was showing more bullish activity than bearish. But like I mentioned on Twitter, trade location in itself is a big edge in the market. And in this case, trade location alone is giving you enough edge for a pullback to the midpoint and VWAP. So, that's essentially how we traded the breakout. And, even though the day before we were quite bearish at, the 68s, things changed overnight. And that's one of the benefits of being a day trader, and one of the requirements really of being a day trader is that you do have to be flexible in the way that you approach the market. And if things change, then you have to be able to change the trade ideas and adapt to the new information. Overnight, we got that strong breakout. That was new information, and then we simply switched our bias from the day before we were looking at 68s as a failed breakout. The next day, it was a successful breakout on good volume, and our bias was really bullish for the entire day. We weren't looking at any shorts early in the morning there. 80.82 was really the only potential short that we would even consider taking. But really the primary trade was on the upside on Thursday. Now today is, I'm recording this video pretty late at night on the 22nd. Now heading into the 23rd, let's take a look at the bigger picture and get some ideas on how ES may play out over the next couple of days. We have Apple earnings out after close on Wednesday, and we got a pretty strong move into the close today, but at the same time we are heading into a pretty decent area of resistance up here, anywhere really around 1493 to 1495, up around 1499 to 1501. These are good resistance zones that could cap the short-term upside, and then ES may just balance between 76.5 and 93, 95 area over the next couple of days. So given the fact that we have this earnings release, pretty important, from Apple coming out after close on Wednesday, the expectation is that we'll probably see more rotational trade, more balancing during the RTH session on Wednesday, and we'll be looking for buyers to re-enter on this breakout retest. If we get a pullback down to the 80-82 area, we'll look for long setups there. In the event that we do push lower, the 76.5 is the main inflection point within this little micro balance, right? So if we look at this chart over here, this is showing you the chart from the beginning of the year, and we can see that ES develops this balance area within this range, 44 to 63, breaks out again, establishes balance, establishes value higher, and then breaks out again. And so far, buyers have been pushing prices higher since the beginning of the year, but every time they've done it, we've still gotten decent opportunities on both sides once that balance area gets established. So at this point, it broke out above 69, and it's been pushing higher, but it is heading into now some decent resistance in this entire 1493 all the way up to 1500. This is pretty decent resistance, and it has potential to cap the upside over the next day or two and result in a pullback to 76.5 and 81.5. But in the event that we do get there on first test, I think on the day time frame, that's going to provide us with good long setups. And in order for this balance area to really, this whole breakout to really, come under question, I think we're going to have to break below the 75.75 to 76.75 area, or you could even say 76 to 78. And as long as we're holding above it, buyers can still be active in the market, and I think we'll still see bounces at support. We'll still see responsive buyers entering on any dips into support. But at the same time, on the upside, we're at resistance, so we will look for some shorting opportunities as well around 93 to 95. And then in the event that we head higher, we'll look at 1499 to 1501, that range, and then expect a pullback to the 1480s again. And if this really gets going on the downside, there's even a chance that it could come back down to this 72 to 73 area as well. And again, first test over there is going to provide us with a decent long setup, and we'll be targeting 76.5 on this one, and then see if it goes any higher. It's really just kind of take it step by step. The market has these various inflection points, and the reaction at every inflection point tells you how strong or weak the market is. So far, we've been seeing continued strength. So any pullbacks, we're going to look for long setups. But again, on any pushes higher, we will look for some exhaustion into those resistance zones and see if we can get some shorts off as well. All right, I hope that proves to be useful. We will touch base again in a couple of days in the next video. Until then, good luck, and we'll catch you in the next video.